Welcome to the Investor Financing Podcast, where we interview real estate investors and lenders so you can learn all the secrets to getting your projects funded and scale your portfolio. Learn about fix and flip loans, BRRRR financing, rental, fix to rent, commercial, multifamily bridge loans, business loans, and so much more. And now, your host, Beau Eckstein.
Hi, everyone. This is Beau Eckstein, and this is another episode of the Investor Financing Podcast. Today, we're going to be talking all about IRAs and things that you didn't probably know that you're going to find out that you can do, how to tap into money that you might have in retirement accounts, and just really cool things. When I started talking with our guest today and learning about the ROBS plan, that you could actually take your retirement funds and convert that money into startup funding for your business. So many creative ways out there, not only for real estate, but for business in general, that I wanted you to listen to this. And we're going to talk not only about the real estate, but opportunities you can do to start a company that you wanted to start for years. So this is going to kind of open your mind to what's available. Some of you out there probably have over the last 15, 20 years, have built up a huge 401k, and you've always left it in the company and it's been managed that way, and maybe you're not getting the returns you want. Well, let's talk about ways you can supercharge your retirement, and you can use your retirement funds to invest in different kind of deals. So Daniel Blue is our guest today, and he's right here in Las Vegas as well. And he has a company that he started many years ago called Quest Education, and they teach people how to make money with their retirement funds and to tap into other people's retirements by learning different strategies. So I didn't do the best description of it, so I'm going to actually turn it over to you and let you roll with it. Thanks for coming.
Beau, thanks for having me on. So yeah, in a nutshell, as you talked about, we help people that usually come from corporate, have a 401k, have an IRA set up, and we help them access those dollars without paying penalties and taxes. And we have found in the years that we've been educating folks about different ways to get creative with the retirement accounts, a lot of what we share with people is not talked about by their financial advisors. It's not talked about by their CPAs. And the really cool thing about all of this is once you understand that you can have a retirement account outside of stocks and mutual funds, and you actually can access it without paying penalties and taxes, the sky is the limit. As you mentioned, you really can supercharge your retirement account. Maybe there's that new business that you want to start. Well, you actually could use money from your retirement account, penalty-free, tax-free, to start that new business. Maybe you have an existing business and you need some capital to take that business to the next level. You can use money in your retirement account, penalty-free, tax-free, to invest into your business. Maybe you want to invest in real estate, right? Maybe there's some properties you want to flip, or maybe you want to do some private lending, get in on some syndication, some construction investing, or commercial investing, sorry. You can do that with these self-directed retirement accounts. So we just do our best to really pull back the curtain and help people understand the possibilities that are out there when it comes to their own hard-earned money.
You know, that's pretty fantastic. Can you kind of explain this buzzword ROBS plan? Can you explain what it is and how it works?
Yeah, so ROBS stands for Rollover Business Startup. And a ROBS plan essentially is a self-directed 401k with a C Corp. So what happens is, let's just say you've got maybe $100,000, $200,000 from a 401k, and you quit your job. You're like, I'm done with the 9-to-5 life. I hate my boss. I hate the politics. Like, I want to start my own business. You know, there's this food truck business I want to get into. I want to get some food trucks going, but I need $100,000 to do it. And my credit's not the best, right? Well, you could actually take that, 150, 200,000, whatever you have in your 401k from your old job, convert it into the ROBS plan. So the money would leave your old 401k, go into a new self-directed 401k. And then that new 401k is going to have a C Corp attached to it. And the IRS says with these plans that are approved by them, you can actually take money from that new 401k, have it go to the new C Corp business bank account, And then now you can have, let's just say $100,000 in your C Corp business bank account, penalty free, tax free in terms of how it got there. And then you are free to use that money for business expenditures. You can buy that new food truck. You can invest in marketing. You can pay yourself a salary, right? You can now use that as working capital for your business.
Oh, that's pretty awesome. I mean, that is like, because we were always taught, well, even if you have just like a traditional self-directed IRA, that you couldn't, use that money if you were going to get benefit from it. But this is completely different the way it's structured, which is very unique. So I just learned about it, and that's amazing. Now let's talk about, I think what would be interesting in this episode is to talk about how to, tap into other people's retirement funds, how maybe like for somebody like me, who's buying properties in Indiana, to open up my mind, like there's something like 26 trillion in retirement accounts, like that there's untapped. So what are some suggestions for like real estate investors to meet people with retirement accounts, and like, or maybe like they have a big retirement account, they're not doing anything, it's not making them good returns. What's kind of the conversation I should have with them? And then like the benefit, maybe I could turn them on to your company where you could talk to them and then explain what your company does and all those pieces in between. Because sometimes I run into people and they want to invest in real estate and they say, I have this 401k, I've got 500,000 in it. And the last 5 years I've maybe made a 1 or 2%, gain on my portfolio. So what should what advice would you have for an investor like myself that wants to tap into these funds, and like the process of like having maybe talk to your company and then how you handle them internally, and then the services that are out there and available to them?
Yeah. So as you mentioned earlier, there's a lot of money in retirement accounts, and there's a lot of people out there that would rather have their money invested in the real estate market versus, stocks, mutual funds, and REITs, right? So, I mean, you're a really good networker, good communicator, super likable person. So, as well as I do, going to these real estate events and going to different events to mingle with people and make connections and network with people, you start having those conversations. Hey, I'm in real estate. I do real estate investing, develop properties, et cetera, et cetera. And you start having those conversations with people where, they understand what you do, and the conversation about a retirement account comes into play. But the problem that you face and a lot of other people face is when you're talking to these people that have money in IRAs and 401ks and they want to invest in real estate with you, they can't do that because their 401k or IRA is with Fidelity, right? It's with Vanguard. It's with MetLife, right? And these big companies that hold most of the trillions of dollars that you talked about, they only allow stock market-based investments, right? So what has to happen is that money has to go into a self-directed custodian. And we work with a few self-directed custodians because our company is not the custodian. We are the facilitator. We are the go-to customer service team, education team, where we take the clients by the hand and walk them through the process and educate them about, a self-directed IRA, a solo 401k, a ROBS plan, right? We help them understand some of the possibilities that are out there. And then once their money is in a solo 401k or a self-directed IRA, then what I see a lot of clients do with self-directed accounts is they'll then use that money and invest it into, the private lending arena, maybe some kind of promissory note, some kind of instrument. And as this is where you got to make sure that you have the proper documentation, the proper licenses and things of that nature to make sure that, what you're doing is structured the right way, because, there's unfortunately as self-directed accounts, there are prohibited transactions, right? And that's where you can end up being in a bad spot as far as the owner of the self-directed account. If the investment, the paperwork, the documents, the fund is not set up properly.
Yeah, that makes a lot of sense. I've done over the years, I've been educating myself on, obviously, because I'm always looking at how I can tap into funds, how I can grow my own retirement and things like that. And, I've heard and I've seen some people that had very small retirement accounts, right? Like they might have had 1,000 to 5,000 when they got started. But then they do creative things and they can really supercharge their retirement tax-free or tax-deferred For example, I knew this, I saw this at this conference I was at. They put $1,000 option to purchase a property, and it was written in the name of their IRA as the buyer, right? And so my SEP IRA or my 401k, solo 401k was the buyer of this property. And then they assigned the contract because they really didn't have the $300,000 to purchase the property, but they put $1,000 up as an earnest money deposit, the solo 401k. And then they essentially wholesaled the deal or signed the contract to another investor who actually bought it. And the retirement plan made like $30,000 off $1,000. So I guess the point is that, and you could do that all within your retirement vehicle, and that could be tax-free or tax-deferred depending on what kind of retirement. So to me, that was really cool because even if you're getting started with later in life, these self-directed vehicles are amazing because you can create huge amount of wealth by doing like these creative kind of deals within your retirement account.
You're listening to the Investor Financing Podcast. We'll be right back after this break. Are you looking for funding? Are you getting frustrated trying to find a lender? Visit investorfinancingpodcast.com and click the Get Funding button. Complete the simple form and schedule a free phone consultation with one of our placement specialists. We have a proprietary directory of funding partners that can help you get the funding you need. It's fast and easy to explore the options available for your specific needs. Don't wait. Visit investorfinancingpodcast.com and get connected.
Yeah, I mean, and what you just talked about, if that same person with that same investment had it done within a solo or Roth solo 401k, as you mentioned, that's tax-free, right? I mean, like that is huge. They say, I forgot who said it. I think it was Einstein that talked about compound interest, being a wonder in the world, right? I mean, compound interest is so huge, but then you factor in tax-free, right? I mean, because if you can find a way to create wealth and it compounds, but then you can eliminate the taxes, because I love a Roth solo 401k or a Roth self-directed IRA, because what you're doing is you're saying, hey, I'm going to pay taxes on the seed. Right, I'm going to pay the taxes up front, but that seed, when it grows into a harvest, it's all tax-free. And there's not a lot of things that are better than tax-free income, tax-free growth.
Yeah, it is really amazing. I love it. And I'm just, continuing to learn all I can about this whole field. Do you happen to know like roughly what the statistics are, like how many people actually self-direct their own retirement accounts?
I can't name like the article I read, but a few times where I have seen that statistic come up, that number come up, it was something like between 3 and 5% of people actually have self-directed retirement accounts. More people think their accounts are self-directed, right? I'll be talking to someone, they're like, yeah, I got a self-directed account with Fidelity. And I'm like, oh, okay, awesome. Can you buy real estate with it? They're like, no, it's self-directed. Like I can buy Apple stock, I can buy this ETF, I can buy this REIT, I can buy this mutual fund. And they're right, it's self-directed in the stock market, but a true self-directed account allows you to actually have the retirement account own property. It allows you to do private lending, promissory notes, alternative investments, invest into, private companies, other companies, your friends, solar company, things like that you cannot do inside of a IRA or 401k with, Fidelity or Charles Schwab.
So basically, if somebody were to come to you and they had a retirement account right now, and let's say they used to be a business, or they used to be an employee, and they saved up over the last 20 years, they have a $250,000 for whatever argument's sake. Now they're last year they're self-employed. Now they have their own business. Now they're figuring out what they want to do with that 250, and it's still with that Fidelity, let's say. So. Like if they call you, I mean, what's the intake look like for you internally? Like, how are you're basically having a conversation with them and figuring out what avenue would make the most sense and give them their options. Like here, this would be good for you because of this. And then you basically hold their hand through the process. I mean, how do you assess what retirement vehicle that would be best for somebody? I mean, typically, I know it's kind of a broad question.
Yeah. Well, I mean, if someone has a side hustle, 1099 income, an LLC, sole proprietorship, has some kind of business activity, and they are that entrepreneur with no W-2 employees other than themselves, then there is an IRS approved retirement account called a solo 401k. And to me, when I break down the difference between a solo 401k and an IRA, the solo 401k is superior to the IRA. One, you can contribute up to $56,000 a year of new money, not rolling money over from an old retirement account, but actually contributions, new money putting into the account. You can put up to $56,000 a year into the solo 401k. An IRA, you can put up to $6,000 per year. A solo 401k also has a loan feature where you actually can take out up to 50% of the account value, or $50,000, whichever number is less, without paying penalties and taxes. There is no loan feature on an IRA, and this loan feature works wonders. I was talking to a client here recently. He had about $40,000 in credit card debt at about 22% interest. So $40,000 credit card at 22% interest. He was getting crushed, not only in terms of his credit score, his utilization rate going up, credit score going down, but he's losing thousands of dollars in interest. And at the same time, he has this retirement account, this 401k from his old job, that's not making 22% a year, right? He's making 7, 8% a year, whatever he's making. So he's losing money faster than he's making money. So he loved the idea of a solo 401k, using the loan feature, taking out $40,000, no penalties, no taxes, paying off that credit card debt in one shot. Now his credit card debt's gone. His utilization rate goes down, credit score goes up. So maybe he wants to refinance his house, or maybe he wants to get a line of credit or a term loan for his new business. He's going to have, you know as well as I do, you being in the lending space, he's going to have better odds at getting a bigger line of credit, a better interest rate with a better credit score. And he's not losing all of that interest. So when I look at a solo 401k and an IRA, you know, the solo 401k, it offers a lot more than an IRA. And when we are talking to clients like this, you know, we're going to teach them about the differences between an IRA, a solo 401k, you know, the ROBS plan. And what we tell people is, hey, Bob, this is your money. Right? No one cares about your money more than you do. Not me, not your CPA, not your financial advisor. I am not here to sell you an investment. I'm not here to tell you what to do with your money. I'm just here to tell you about public information that's on the IRS's website. This is all public information that no one has talked to you about. So I'm going to pull back the curtain, help you see some of your options, and you make the best decision that you feel is going to be the best for your family, for your future. Because sometimes people want to open up a solo 401k to pay off credit card debt, or fund that new business, or invest into, you know, real estate flips, right? So it really comes down to where they're at right now and where they're trying to go to in the future.
That's some great advice. And the reason I also wanted you on the show, obviously this is a great topic, but it's so important for people, especially in real estate investing and even any business owner, right? Is to know what tools are available to them. And so many of us don't know that we have these options, right? So I feel it's kind of my job now that I started this podcast is to like help bring on people that I've met through my journey that can add value to the listeners that are going to listen to the show, because there's so much out there, guys, that you can tap into. And sometimes we feel stuck when you could just have like this ROBS plan, or, you know, there's options. And then when you're talking to other people and you know, you might be able to solve their problem by referring them to somebody. That's how these networks grow. We learn, right? We're learning something new. There's a lot of people out there that probably never even knew you could self-direct your retirement funds. They're going to hear this and go, wow, this just opened up my mind. I mean, you know, thank God for social media, in a sense that we're able to share to a broader, you know, bigger group, right? Because for many, many years, nobody knew, you know, it was so small. It was like 1 or 2% maybe that used self-directed like 10, 15 years ago, or 10 years ago, let's say. Yeah. So it's growing, but very slowly. But
yeah. I mean, and it's not people's fault at the end of the day. This isn't taught in school, right? I mean, we've talked about this offline. Like, they're not talking to kids in high school about credit scores, LLCs, you know, entrepreneurship, you know, real estate. They're not talking about that. what a mortgage is, right? So at a young age, we're conditioned to think a certain way. And then you've got financial advisors that are making money off of the fees in these mutual funds, right? They're charging 0.5%, 2% a year, right? So it's in their best interest to keep your money locked up in these mutual funds making fees, right? Why would they want to teach you a retirement account that would allow you to control your own money, that would allow you to invest in real estate or your own business? It doesn't serve them, right? So either one, they don't know about these accounts, these financial advisors. It's not on their menu at Fidelity. They weren't trained on these accounts. Or two, they might know about it, but it's just not in their best interest to teach their clients about it.
Yeah, that's good. And you're right on the nose with that. Like, I think, everybody always says, well, you always have to have a why in life, right? Like, and I was like, well, I don't have a why. And then I just started thinking about it. It's like, I'm kind of more passionate now is about, cause I've noted the struggles that I've had and where I want to go with my life and the vision of that laptop sitting on the beach. And that's my work day, right? Like, That's my goal, that I want to be able to do that when I choose anytime.
Yeah.
And it's going to come through educating yourself and learning what's out there, right? And there's so much knowledge out there nowadays. You gotta start tapping in. Speaking of that, what are you tapping into to keep yourself motivated, to keep yourself, up to date? I mean, what books do you read? What podcasts do you enjoy?
Man, I just got done reading this book right here, and this is a really good book for people to listen to. People listening to the show, because if you're listening to this show, there's a reason why, right? You're trying to make more money, keep more money. And The Power of Zero is a really, really good book. It talks about how you can actually have yourself set up to really, really minimize your taxes and pay as little as taxes as you can. Not that we're advocating don't pay taxes, right? But at the end of the day, how can you, in a later stage in your life, your 40s, your 50s, your 60s, really minimize your taxes? And it just talks about how right now, the top tax rate is about 38, 39%, right? That's historically a low tax rate, right? If you look at the 1950s, 1960s, 1970s, you're going to see the top tax rate was like 70, 80, like almost close to 90%. Like, that is huge. I couldn't even imagine living during that era, right? So right now we're at a historically low tax rate. So what the book talks about is the power of Roth retirement accounts, the power of LIRPs, life insurance retirement plans, right? Being able to use Roth retirement accounts and these unique insurance vehicles where you can lock in at low tax rates today. As I mentioned earlier, pay taxes on the seed. Just pay taxes on the seed right now, and then let that harvest grow tax-free. So if the government raises taxes, and I'm not an economist, I didn't get a degree in being an expert in the economy or anything like that, but I just have a good feeling the government's going to raise taxes in some way, shape, or form, because so much money is going towards Social Security, Medicare, Medicaid, right? So it's just only looking at the future and seeing, man, to be able to make up this gap, this deficit, they're going to have to raise taxes. They're going to have to bring in more revenue. So if I can pay the taxes now, 10, 15, 20 years from now, if they raise the taxes, that's not going to impact me, right? So it's a really, really good book, super tactical. Definitely recommend people read that book. You and I have talked about this. Audible has been huge for me. I have a 20-minute commute to the gym every day. So that's 40 minutes there and back. I don't mind that commute, right? Because I'm listening to a book, right? And most books are 8 hours, 12 hours in terms of like when you purchase it on Audible, the actual length of the book is maybe 8 to 15 hours, depending on the book. I'm able to knock out a book, once a week, once every week and a half. So that's been really huge. And there's a few podcasts that I listen to, Ed Milet, Andy Frisella, and then just going to masterminds and events. And that's huge because that's how I can meet awesome people like you.
Yep. I kind of do everything you do. That's pretty funny. That's probably why we met, right? Because we do the same things, the self-development, and you can never stop growing. And that's kind of like what I've realized about myself, that I need to be, in order for me to be more successful, just, keep around people like you, positive energy, really has been like the key, right? And so in Las Vegas, you do some educational events for people, and you have a website where people can go. What's your domain name or
Your Quest, yourquest.com. And I do my best to put out content on Facebook. The name is Daniel Blue. I think I'm the only Daniel Blue in Las Vegas. So if you see Daniel Blue in Las Vegas, that's me. And I do my best to put out content there. And, people that do DM me, I'm able to respond. And just my whole why, and you and I kind of talked about this, and you mentioned it, like it's like we're driven, right? Like the why to make money. Okay, that's great, right? The why for our family. Okay, that's a given. You just got married, again, congratulations. So the why for a wife, like, that's just a given. But like you talked about, it's like all of this information is not talked about. It's not at the forefront. And for me, I just see a huge gap where someone goes from corporate, starts a business, and they're just so focused on marketing the business, getting leads, the operations, the sales, like they're just so focused on running their business. Like they're not paying attention to the importance of credit, the importance of business credit, the importance of, making sure they're structured and having an entity, using their retirement accounts the right way. Like you mentioned, just knowing that you've got these tools on your tool belt that you can use to get more results in your business. And, I'm just doing my best to bring that out there and impact more people. So in that way, at least they can be aware of some of this knowledge, and it's on them if they want to take action.
I love it. Well, I'm going to put all your contact information once this is uploaded and my virtual assistant does her thing with it. Gotta love your VAs. But we'll have all your contact information. Appreciate you joining us and spending time here. And I think we delivered a lot of value, and love to have you come back, and we'll kind of take deep dives maybe on another episode. But in the beginning, it's just give the overview, right? Because there's so many different ways. And if you have questions in between, you can reach out to Daniel, and he will get back to you when he can, and you guys can kind of dive in and see what's available for you. So thank you very much, guys.
Thanks for listening to the Investor Financing Podcast. For show notes and useful resources, please visit investorfinancingpodcast.com. For questions or comments, email info@investorfinancingpodcast.com. If you enjoy our show, please share it with your network. Until next time.